Coming up next, new home sales came out for the month of August. It was just released a few moments ago. We're going to talk about it with Bob Moulton. He's president of Americana Mortgage Group. He's joining us to analyze this data after this break. It came in much lower than expected. Please stay with us. New home sales figures for the month of August were released a few moments ago. Let's turn it over to Bob Moulton, who's the president of Americana Mortgage Group, to get his views on this latest data and the state of the housing industry. Bob, thanks for coming in today.
Thank you, Susan. Good morning.
Good morning. The report came out about 40 minutes ago. The numbers coming in weaker than expectations, which were already down. I mean, expectations had been ratcheted down, but this number came in even weaker than that. What do you think? Well,
I think there's a combination of a couple of factors that are going on. Rising mortgage rates are always going to affect new home sales, but what's happened here because of Katrina, we're also seeing a rise in fuel prices, which is affecting the cost of construction, particularly the byproducts of what it's costing to build houses. And I think, people that are looking at new home sales are getting a little concerned because the houses are expensive, and to heat them might be more than what they originally budgeted for.
And that's another way that they're going to be facing later this winter, of course, is the heating costs. Do you think, are you starting to hear about anecdotal evidence that the housing market is starting to crack?
Well, I'm seeing inventory grow, and I'm seeing houses stay out there a little longer than where they were a few months ago.
Is this on a national level?
This is more on a northeast level and not necessarily on a national level, because areas in the southeast and in the west still seem to have a lot of momentum in those markets. But in the areas that are needing fuel to heat, such as the northeast and the northwest, I'm seeing just the houses stay there a little longer than they would normally.
Have you seen any contraction in prices? Are people still getting their asking price?
There is a little bit of softening. I'm seeing in some areas where sellers are willing to take a little less because they think they are getting concerned. There's been a lot of attention brought to the housing bubble that is putting some thought into sellers' heads, and they're saying, well, if there is a bubble, maybe if I take a little less right now, then I'll be ahead of the game than if prices do start to drop a little bit.
How do you see the evolution of this market over the next 6 to 12 months?
It depends on where rates go. It depends on what happens with fuel prices. I think fuel prices may have peaked out, but even at the end of the winter last year, a lot of first-time home buyers that were buying houses were postponing closings by a month or two because they didn't want to pay the fuel bill for that month. I think as we get into the winter, it's depending how cold it is, what happens with fuel, what happens with mortgage rates, what happens with the jobs market is going to affect where the housing numbers are going to go.
Do you think, though, it's unfair to talk about a housing bubble in this environment, in the sense that, yes, maybe things are starting to moderate a little bit, but if we continue at this pace, this could be a record year, yet another record year for this industry. Is it unfair to talk about a bubble when you're really coming off of a multi-year run that we've seen in this industry?
04 was very strong. 03 was strong. I am pleasantly surprised to see how strong 05 was. What did happen this year that we didn't have last year is we came out with interest-only mortgages. Interest-only mortgages increased buying power 20%. So someone who was looking at a fixed-rate mortgage maybe couldn't get into a particular house, but when they took the interest-only mortgage or an adjustable-rate mortgage, they were able to get into that house. So that's also continued to fuel. I don't know how much more creative financing can get. So if that's peaked out this year, the beginning of next year, things might slow down just a little bit.
Now, we have been talking about rates moving higher, and it's going to slow down the market. Is today's data kind of the first statistical indication that actually that is coming to fruition and those forecasts are actually starting to happen?
Well, yesterday we had existing home sales come out, and existing home sales was very strong. And the median home price in the existing home sales number was at a 26-year high. New home sales account for 15%. So in terms of the whole overall picture of the housing market, I think we'll still see a strong housing market going into next year. We'll have to see where all the numbers come in at this point.
What are you hearing about the backlogs, for example?
The backlogs in terms of construction, I'm hearing that there are buyers that still want to buy new construction, but those prices are continually being adjusted based on what the cost is to build them and based on the amenities that the buyers want in these new houses.
So they're being adjusted higher?
They're being adjusted higher.
So not clear whether actually people will end up buying them for these higher prices or not?
Right, and I think what might happen is they're going to ask for 100% financing or 95% financing, and depending if they qualify or not will determine where those numbers will go.
All right. Bob, thank you very much for stopping by today. Our thanks to Bob Moulton, the president of